Welcome to this video. Today we need to talk about AMC. AMC just approved a 150 million share dilution on February the 2nd. And the question is history repeating and could this lead to more downside, or is a short squeeze around the corner? In this video we're going to go over the latest news, the fundamentals and technicals, and we're going to find out what's most likely to happen next for AMC. So without further ado, let's dive right in. We're now looking on the charts of AMC on TradingView, and we can see that AMC is trading at $1.61 right now. And we can see that it went here all the way down. We're now looking on weekly candles. You can see that the RSI is oversold, so this could be a potential bottom. But a lot of people are also saying that this is a falling knife and there's more downside to come, especially after the dilution approval. If we look here on daily candles, we can see that the trend is still negative. We can send the 50 EMA below the 200 EMA. And we can see that my average cost price is around $2.20. So I'm still down roughly 26% right now. In this article, we can read AMC Entertainment amends note agreement, plans up to 150 million stock offering. And if we read here, we can read here the amended agreements allowed AMC to conduct one or more ATM offerings of common stock for cash, with aggregate net proceeds not exceeding 150 million. These offerings may occur during the ATM restricted period, but not before February 2, 2026. So what does this mean? This means that AMC has the right to issue new shares for $150 million, and they create these new shares and then they sell these shares. And then they collect all this cash. But this dilutes the stock because more shares in circulation, each share becomes less valuable. It's similar to printing money. The more money you print, the less a dollar becomes valuable. That's in theory, right? So why do? It? They do it to collect cash from the market, essentially from the investors. And they use that cash to clear their balance sheets because they have a lot of debt. But this debt is not free. They need to pay interest. So they want to clear their balance sheets and get rid of the debt by basically getting the money out of the market by issuing new shares for $150 million. But I think they're not going to just collect this $150 million in one day. They will do it gradually. They will do it to clear their balance sheets and get rid of the debt. That's the whole idea behind it. But there's also good news for AMC. I've talked about this before. But we can read here, AMC Theaters declares Netflix Stranger Things series finale theatrical event a triumph. More joint Netflix AMC Corporation envisioned in 2026 and beyond. So AMC is now working together with Netflix, and they brought in a lot of revenue with the latest series of Stranger Things. And they make a lot of money with the food and drinks, with the concessions. So AMC is doing actually pretty well recently. And they see more moviegoers, which is great for the company and for the investors long term. AMC has done ATM before, so issuing new shares and selling at the market to create cash and dilute the stock. So that's why we saw so much downside in the history of the stock. But we can see here that after the pandemic, the revenue has been increasing and the debt has been decreasing. So based on these trends, it's actually looking pretty solid because the debt is going lower and the revenue is going higher. But of course, this has affected the stock price. AMC is the largest movie exhibition company in the world, and they have over 800 theaters. But are they in the right industry? Well, here we can read that the movie theater industry is projected to grow from 83 billion in 2025 to 137 billion by 2035, exhibiting a compound annual growth rate CAGR of 5.12% during the forecast period 2025-2035. This industry will grow with 5% every year in the next 10 years. So that's definitely a good estimate. So they are in a growing industry, but it's not growing too fast. But a 5% compound annual growth rate is still enough to become profitable and to turn this company around. And there is definitely hope that this company can do well because they are the largest and they do have a small economic moat, which keeps them protected. So what are the major players? AMC Theaters, Cinemark Holdings, Regal Entertainment Group, Cineworld Group. So we can see that AMC is definitely the biggest. So they have a good chance to take most of the market share in the movie theater market. AMC is the largest movie exhibition company in the world, but they don't have the strongest moat. They do have a small moat because they have a lot of market share, but they can definitely improve when it comes to economic moat. So an economic moat is a competitive advantage that a company has towards competition, and it's a theory popularized by Warren Buffett. And we can see that the overall moat score is a 1 out of 10. So they have a little bit of intangible assets, switching costs, and efficient scale, but they don't have any network effects or cost advantages. And here we can see that the key strengths are large global theater footprint, strong brand recognition, and high traffic during blockbuster releases. But there are also many risks like extremely high debt burden, long-term decline in theater attendance, and competition from streaming platforms like Netflix. But now they're working together, so that could definitely be a positive catalyst for AMC. So the big question is still, is AMC undervalued? Well, based on alpha spread, they say it's massively undervalued by 81%, and the intrinsic value is $8.28 on a base case scenario. So on the worst case scenario, it's still undervalued and it's worth $5.69. We're now looking here on Finviz, and we can see that the market cap is 825 million and the price to sales ratio is 0.17. So price to sales is basically market cap divided by its revenue, and this shows that they have a lot of revenue compared to its market cap, which could indicate that the stock is undervalued as well based on price to sales ratio. So what could be the stock value after the dilution? So the maximum dilution ATM is $150 million. And this means that AMC has the right to sell up to $150 million worth of shares. But that doesn't mean that they're going to sell these shares instantly at the market. This means that they have the right. So in the worst case scenario, they sell all the 150 million shares. But they will do it gradually over time. But this is the maximum. So if we look at the market cap, we can see it's $825 million. And the dilution, the maximum dilution, is like 18.2% of the market cap. So 150 million divided by 825 million is 18.2%. So the AMC ownership dilution is up to 18.2% only if all 150 million shares are issued. AMC is a meme stock. It's one of the original meme stocks, and there's a lot of mass psychology behind it. So a lot of investors are wondering whether there is a short squeeze possible that happened before, which means that shorts have to buy back their positions, and that increases higher prices. So here we can read AMC Entertainment Short Interest Overview, and we can see that the short percentage of float is 18.19% and the short interest ratio is 3.5 days to cover. So it takes 3.5 days to buy all the positions back. So the longer this time, the better it is for a short squeeze because it will last longer. A short percentage of float of 18% is pretty high, but for a meme stock, I wouldn't say it's like super high. And if we look here at the short percentage of float, this stock has always been shorted pretty heavily, but we can see at the end of the year that at a short percentage rate of 18.9% is pretty significant compared to the month before. So there's definitely a probability of a medium-sized short squeeze, but there needs to be more of a bullish catalyst to trigger something like that. So we're back on the charts again here on TradingView. And we can see now the price, the market just opened, is now at $1.63. And I think that the dilution of 150 million is not going to affect the stock like a lot because they will do it gradually. And I think that the true value per share is still higher than right now. So alpha spread say it's around $5. I think it's probably like around $3. So if you do it for a conservative measure, I think we can definitely go back to $3. I think that's definitely possible. I think that the dilution is the dilution fear. Everyone knows this news already, so it's already priced in the stock already. So I don't think that this news is going to crash the stock like 30% more. But of course, everything is possible. Always do your own research. Always do your own due diligence. But if you like this kind of content, feel free to like and subscribe. And if you want to support my channel even more, consider becoming a member, and then you can also get a few exclusive videos as well. With that being said, I hope you have a great day, and I'll see you in the next video.